Hey, how's it going everyone? Welcome to another RF Crypto video. On today's video, we're going to be speaking about the general crypto market and how it's crashed, and the ongoing crash has been continuing for the last 2 days. We're going to be looking at investor sentiments and how fear and greed is in the market. Also, on the back of Bitcoin slipping to 42,000 and major cryptocurrencies following suit, we're going to speaking about how stocks end lower after a choppy session in the New York Stock Exchange, and also how treasury yields touched the highest level since the start of the pandemic. On some positive Bitcoin news, another ETF buys Bitcoin futures, and they stated that this is because there is potential for significant returns on them. So even though the market is quite bearish, there are some people that still believe that Bitcoin is going to go up. Also, GameStop stock surges following NFT marketplace report. Polygon was under accidental attack. It was like an accidental DDoS attack, and it sent gas prices soaring due to the congestion in the Polygon network. The cryptocurrency market has fallen by about 2.5%. It now stands at $2 trillion. I mean, if this continues, the market might fall below the $2 trillion mark, which we haven't seen for a very, very long time. As you can see, the markets are mainly red with some green here and there, and these greens are cryptos that are not correlated with the general crypto market itself, or they're not correlated with Bitcoin and Ethereum. Also, dominance was at 38, 39% 2, 3 days ago, and now it's gone up to 41%. This just shows that whenever there is a report that the markets are going to become riskier, Bitcoin is still the safe haven in crypto. So it's considered as the safest crypto to be in. It's probably the fact that even though a lot of people sold their cryptos to go into stocks or bonds, a lot of people also sold altcoins to go back into Bitcoin. Hence, why its dominance went up by 2 percentage points in the last 2 days, even though the prices are going down. If we look at the Bitcoin chart, I had said that the support level was at around 46,000, and if it goes slightly below this 46,000, then a dip would follow suit, and this is exactly what happened. It was trading in this narrow band between 46 and 48,500. It kept going up and down, just briefly touching the support level. It kept on touching, and whenever it touched, it went back up again. Once it went significantly below that, we saw red candles following, and the price of Bitcoin going very quickly from 46,000 to about 41,200. The next support level is at 40,000, and if the price of Bitcoin touches this, it might trade between a band of 40 and 42,000. But if it goes below it, significantly below it, let's say down to 39,000, we might see more red candles, and we might see Bitcoin trading at a level between 35 and 38,000. The crypto market at the moment is quite fearful. The fear and greed index is at 18, one of the lowest we've ever seen. Yesterday it was even worse at 15. This is mainly because the price of Bitcoin crashed so heavily, and this was so unexpected given that there were expectations that the price of Bitcoin would go to 98,000, 100,000, 150,000 in this bull run. And effectively, I think the bull run is basically over. We're in a bearish season at the moment, or in a transitory period between a bullish and bearish season. And naturally, people are going to get fearful. They're going to invest out of crypto, or they're going to invest out of altcoins into a little bit into Bitcoin, and mostly into stocks and bonds. But the stock markets have been choppy as well, and we've seen losses in the stock market. So people are mostly probably keeping their money in the bank, waiting for the right time to deploy, or they're investing in bonds and safer assets like unit trusts and fixed deposits. So stocks end lower after a choppy session. US stocks fell Thursday in a choppy trading session, dragged down by investor worries about the impact that the Federal Reserve would have on markets if it raises interest rates faster than once anticipated, and also if it starts decreasing the size of its balance sheet. Also, volatility accelerated on Wednesday after minutes of the Fed's most recent meeting showed officials eyeing a faster timetable for raising rates. So the rates were expected to be raised in June, and now there is discussion from the December meeting that it's going to be raised even sooner in March. This is not good for the asset industry in general, especially stocks and crypto, because if the interest rates rise, the cost of borrowing rises as well. This means that there will be less money in the markets available to inject into these stocks and crypto, and since this is a bearish signal, people tend to invest out of riskier assets such as tech stocks, which is represented by Nasdaq posting its biggest one-day percentage loss since February 2021, and also crypto, which has dropped significantly in the last 2 days. The yield on the 10-year US Treasury note rose for a fourth consecutive day, reflecting investors' conviction that the fast-spreading variant won't stop the Fed tightening monetary policy to tame inflation. The rise in this yield indicates that there is less demand for this Treasury notes, so even safer assets like bonds are being in less demand, which means that the whole market in general now is in a bearish position, and most people, as I said before, they don't want to invest, they're fearful, so they're holding cash or putting it in fixed deposits or unit trusts. Also, investors are bracing for the possibility of a volatile spell for tech stocks, which have powered the market higher since the early pandemic slump in 2020. Shares of companies such as Apple and Microsoft have benefited from the low interest rates on top of blockbuster earnings helped by the shift to home working. So the pandemic actually helped tech companies, and their stocks saw record highs. And this was a combination of work from home and cheap money by low interest rates. But if interest rates rise, then there will be less money, as I said. This will negatively affect these tech stocks, even more so than it has been affected at the moment. Also, because the yield on the 10-year Treasury note rose, this means that the tech stock's future cash flow, so the value of each share, has decreased because they're applying a higher discount rate for the future. This is a negative signal because going forward, now it's predicted that these tech stocks will be worth less than what they were worth when the 10-year Treasury notes yield was lower. An increasing yield will mean a lower valuation for tech stocks, which is a bearish signal, and this just shows why people have been selling tech stocks and hence why Nasdaq is dropping so fast. Laurent Sis, a crypto exchange traded fund expert and director of CEC Capital, said that about $200 million in long positions have been liquidated in the past couple of hours, pushing the spot price lower. Sis added that the leverage continues to remain high and a further drop below 40,000 may be seen, more so if bond yields continue to rise in the Fed's hawkish stance. Remember yesterday's video where I said that $800 million worth of futures and options were liquidated? Today, 200 million more were liquidated. This puts over $1 billion worth of futures and options being liquidated in a space of 2 days. If most people are in a long position, in a long futures position, they expect the price of Bitcoin to go up. This is the only time they're going to benefit. If the price of Bitcoin goes lower, then the value of their portfolio actually becomes negative. And when this happens, the exchange closes their position to protect themselves. The investor's portfolio goes to zero. When this happens, it's a bearish signal to the market, and as a mass sell-off starts to happen and the price actually goes lower. So lower prices triggers liquidations, which trigger even lower prices. This is why, if you see here, a big red candle is always followed by another big red candle. The first one being the drop in price due to some news, and the second one being the liquidations that took place. And they're right. If the leverage continues super high at all-time highs, and the fact that the leverage traders think that Bitcoin is going to go high when it continues to go lower and lower and lower may indicate that the drop in Bitcoin price or the drop in the crypto prices in general have not come to an end. I predict that it might go below 40,000 and trade between 35 and 38,000. There is another version of the story, and people are looking at it in a more positive angle. They state that the fears of a prolonged bear market in stocks and digital assets might be overblown, as historically markets have remained resilient during tightening cycles. The tightening cycle is what we're going to enter in from March, when the Fed increases interest rates. And indeed, Bitcoin pretty much remained bid through the major part of the previous tightening cycle that began in December 2015 and ended in December 2018. The cryptocurrency rallied from roughly $350 to nearly $20,000 in the 2 years to December 2017 before entering a year-long bear market. This might be true. Bitcoin might go up again. We never know with this market. But at this point, the prices have gone so high, and we have seen the crypto market expand by so much, and all these new products coming in to the market, and also Bitcoin dominance going down. What the crypto market was between 2015 and 2017 was predominantly Bitcoin dominated. What the crypto market is in 2022 is not Bitcoin dominated anymore. So this might be true, but it might not materialize just because the dynamics of the industry has changed. So a US listed exchange traded fund, Wisdom Tree Managed Future Strategy Fund, has added an allocation of approximately 1.5% to Bitcoin futures, citing that there is potential for significant returns uncorrelated with the broader market. This ETF sees Bitcoin as a significant investment in the sense that it will offer returns, as well as a diversifying asset to their portfolio in which it's not correlated with the broader market. It might be correlated with tech stocks, but not with the broader market itself. And also, while the allocation so far has been 1.5% of the fund's mandate allows up to 5% of its assets to be made up of Bitcoin futures. And it just shows that MicroStrategy will gradually increase this 1.5% to the 5% that it's allowed. And I believe it will. I mean, there's no reason for it not to, because 5% isn't a significant amount. And if they see Bitcoin as such a good diversifier, then by all means, it achieves their objective of producing positive results in both bull and bear markets. We might see more and more funds taking up this type of strategy where they add crypto to their portfolio in order to diversify from the broader market in general. GameStop stock surges following NFT marketplace report. GameStop is now a meme stock. GameStop was an actual company that used to rent out video games. It basically went bankrupt, but a year ago there was a group of Redditors that artificially manipulated the price of GameStop, and it went up by about 200 or 2,000 times. It caused a lot of trouble. The SEC got involved, and it was a whole mess where a lot of these exchanges stopped trading GameStop just because it was artificially manipulated. I mean, go against the system, suffer the consequences, and it's not fair, but that's what happened. So this time, GameStop surged by up to 31% in aftermarket trading after the Wall Street Journal reported that the company is launching a division to build a marketplace for NFTs and to establish cryptocurrency partnerships. And this is a strategy to turn around their loss-making streak and turn profitable once again. They want to open an online hub for selling and trading NFTs of virtual video games goods, such as avatar outfits and weapons, and for this they hired more than 20 people. Due to this announcement, Loopring, a layer 2 platform, its coin spiked by about 15% because there have been rumors that GameStop will work with Loopring on its NFT marketplace. And it just goes to show that a small little news caused this layer 2 protocol's price to go up, even though there's nothing set in stone yet. It's incredible how the market works. It's very, very behavioral. So since at least Tuesday, Polygon proof-of-stake chain users have been taking to social media to gripe about failed transactions and degraded performance across all blockchains. A transaction on Polygon now costs around $0.50, up from what it was, which is a fraction of a cent. Additionally, the number of active addresses in Polygon's proof-of-stake chain has spiked by about 60% in a single week, with more than 200,000 accounts transacting on the chain. And the speculation is that many of these addresses are bots. And botting play-to-earn games is an endemic because a lot of the most famous gaming platforms in the blockchain network, such as Axie Infinity and Alien Worlds, are struggling to differentiate between players enjoying a game and computers farming a digital cash. So they place all these bots in order to farm these tokens for them to sell at a profit. And what happened in the Polygon network is that the Sunflower Farmers is a simple resource gathering game that uses blockchain transactions for in-game actions, a dynamic some have likened to an unintentional DDoS attack. So what happens is that because they use the blockchain transactions for in-game action, they probably flooded the blockchain networks because there have been so many transactions, and this constitutes a unintentional DDoS attack because when a server is flooded by so much unintended or unexpected transactions, it will go down. And this is what went down in the Polygon network. And I mean, it's good that they're going to figure this out before and find ways to stamp this out, or to ban bots, or to increase capacity, or any other solution to prevent the networks to go down and to prevent the gas fees from going from fraction of a cent to 50 cents, which seems like a little bit, but it's hundreds of times what it was before. And with that, we come to the end of today's video. If you like the content, please leave a like, please hit the subscribe button, share this video with your friends and family, and I'll see you for the next one. Invest wisely, and cheers.